All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And upon downloading the free ebook, you will be put into my email distribution list where you'll start to receive my weekly newsletter called the Cubicle Weekly Reader that comes out every Monday at 10 a.m. Eastern Standard Time. And we talk about, of course, stock investing. We also talk about cryptocurrency investing. And from time to time, we do share stocks and also cryptos that we're looking to invest in, or we have already invested in. But however, we don't give investment advice, but we do share some investment ideas, um, from time to time. So you definitely want to be a part of the Cubicle Weekly readership. Additionally, we also have for a small investment, we also have an ebook that you can download that actually goes more in depth than the free ebook, and actually gives you access to video demonstrations showing the actual strategies that we use. And it's not just vertical put spreads. We do use other strategies as well, and it also goes over various criteria that we use to determine whether or not a underline is a good candidate for selling options or for selling vertical credit spreads on. So check out the website cubicleinvesting.com. All right, so today is Wednesday. It's January the 25th. It's approximately 2:48 p.m. Eastern Standard Time. So I got into a trade really first thing this morning at 9:40. Right out the gate, the market, made a pretty significant move to the downside. I saw that as an opportunity to get on the put side because I had a strong suspicion that the market would bounce, right? Because the market, the investment environment is beginning to improve. Okay, so I saw that as an opportunity to get to put on a vertical put credit spread and go well below the 2 times the expected move. So I have spoken about, uh, one of the things that I look at is the expected move. I'm not going to go too deep into that in this video, but nevertheless, so I went well below the expected move, 2 times the expected move, which is 39.50 right now, right? That's the 2 times the expected move. And so I put on a vertical put credit spread where my short strike, and I'll show you the position here in a minute, where my short strike is at 39.25. So I put this alert here on in my Thinkorswim account, just, of course, in case the market should happen to plunge and plummet, and goes below my strike price 39.50, 39.25, and I'm not at my computer, then it'll send me an alert to my phone. But nevertheless, that's not going to happen, for sure. So as we can see here, in spite of the fact that the market made a significant move to the downside, it continued going down, and then it bounced off of this support area that I have marked off here at 39.49, and it bounced and recovered very nicely. And as you can see here, it has gone up over 50 some points throughout the day. So here's taking a look at the position that I'm in. As you can see here, so I sold the 39.25 and I bought the 39.20. I sold 4 contracts, and as you can see here, the price of the underlying is well above, in terms of price, it's well above my position of 39.25 and 39.20. So of course I'm gonna let this expire worthless, and I'm actually thinking about putting on, potentially a vertical call credit spread to take in additional credit, but I don't think I'm gonna do that. I don't want to be greedy here, and the market, just should happen to do a pop in the last hour, last 30 minutes before the session closes. So I think I'm just gonna, let this position here expire. Yeah, but nevertheless, yeah. So as I mentioned before, so now yesterday, I actually waited until well in the afternoon because the market was really somewhat range bound, as you can see here. And I'm always reluctant to get into a position when the market is range bound because you don't know uh, where it's going to break out, whether it's going to break out to the upside or to the downside. So I'm really much more comfortable putting on a position when the market makes a pretty significant move. But nevertheless, I did put on a vertical call credit spread yesterday, and I was able to, that expired worthless, so I was able to walk away with the entire profit. But just looking at the amount of volume that was being traded in the market yesterday, and also the fact that the advanced declining indicator, had a hard time getting above, that 300 area. I knew that the market wouldn't pop so much yesterday, and so I decided to go on the call side and put on a vertical call credit spread, and basically just ride it out. So yeah, so that's pretty much what I've been doing, considering that it's been somewhat of a challenge trading this really low volatility environment right now because the VIX is rather low. The VIX, if we take a look at the VIX, VIX, the VIX is below 20. So right now it's at 1929. So of course, when the VIX is low, particularly when it's below 25, the premiums which one can receive for selling vertical spreads on the SPX, particularly zero DTE SPX trades, the premiums just aren't going to be very inflated. So it's definitely a challenge, trading in this deflated environment. But nevertheless, the opportunities are always there if we know what to look for.